Hello everyone, and I hope you're doing fantastic today. So I want to show you today an example of why you should be hodling instead of day trading. So I made this chart here, which is actually used by the software Grasshopper and Rhino that has an API to the BNB Exchange. And in here, we basically can increase this number slider. And what this shows us is if we would exclude all the perfect days or weeks in this case, because we are looking at the weekly channel, how much more profit we would have in that matter. So if we would be trading gods, we would basically be able to exclude all those drops that we see here, for example, on the 5th, on the 23rd of May. Then some drops obviously in 2017 and 18, quite a lot of them, especially the one in November. And we can see basically how the chart would look like if we would include those days. And obviously, the less or the more days we exclude, the more closer this is to the thing. And keep in mind, this is also just like the first and second week would be like the perfect ones. So I think it is very important to see, okay, you might be like a god trader, okay? So let's then put this number a little bit more up. Let's say you would increase you made like a perfect run and you always take the perfect weeks. So then, as you see, those are basically the weeks you need to exclude, and you need to like know about them in advance. So you need to have 42 weeks where you know you would make the right decision. And this would basically give you this graph. And obviously this would be a discrepancy of about $75,000. Obviously taking into account that we just like would buy it below $5,000. Now, this looks all very bright and cool and everything, but how does this look like if we are going to use this, or if we're going to have this against us? So let's take this back to our starting point. And now we're going the other way. And take into mind, those are like the absolute values, so the graph would go into the negative when I show you this. So if we would exclude the best days we would have, okay? If we would exclude the best weeks that exist, how much less of a profit we would have. So as you see, we're going down quite significant. So already by just having 9 weeks that we did not include the best or those best weeks, we're already basically down $35,000. So we're basically at zero at the moment. And obviously if we increase this further, it goes more in the negative. Keep in mind though, this is like absolute values, so those values can go into the negative rather quickly. So you need to, I guess, lend money or something to do that. Obviously no financial advice, huh? So I think this is a very good example of showing you how this would look like if you would take or not take those perfect days. We will also now take a look at the daily candles, and we take the values of 300 days, of the last 300 days of the Binance API. And we would see how that would actually look like. So then I guess we were like in the beginning of July of last year, or August, I guess. And now we see if in this case we would exclude only 5 days of this trading range, we would be at around like what, $20,000 basically in total. If I would increase this further, so if you would just miss basically the top 8 trading days, we would be at a sum 0. And obviously if you would miss the top like 12, 13 trading days, we would be basically at total 0. So, and those are like basically the days that we had here, like the 2nd of, is this, I'm actually not sure if this is, I guess it is the American writing. So this is like here in February, it has had some good days, and here also in January and in December. If you would include those days here, we would basically be at a complete loss of our funds. So yeah, and again, if you would just take a look at it again, if we would be absolute trading gods and we would have the same thing with excluding the worst days, we would actually see, okay, we would actually be more in profit. But if you actually take a look at this here, it would be by that much. So if you would be that perfect by excluding, let's say, the top 12 days, you would be 23,000 in profit if you would have a whole Bitcoin. And if you would do the same thing, but you type, or like you are tipping wrong sometimes, then you would be 31,000 in the negative. So I would argue that the downside risk is way worse than the upside potential if you want to go in and out in between different Bitcoin trades. So in the end, the moral of the story is that you should always just hodl and not trade or day trade around. I think this is like the worst thing you could do. Yes, people look at charts and look at prices, and there is a price history of that, but it is not about the price. So I think this, I hope this at least visualizes a little bit, and it is a little bit of an unusual, let's say, showing the data, and this is the whole script of it, how it was made. It is made by with Grasshopper and Rhino, and it is an interesting, there's this plugin called Squirrel, which gives the option to also take a look at that. And just for the last one, to taking a look at the last 1,000 days, I think we would have a similar pattern. And it actually goes even out of my range here. I'll just increase that slider here. So if you would, in the last 1,000 days, would have excluded the best perfect days, you would be just at the profit of 11,000, more or less at least. I hope that number is right, because right now I think it was a low number. But yeah, anyway, I hope you learned something from that, and I think it's very important to keep in mind, just like, obviously you can be absolute trading god and be like, you know what, you can do all the trades absolutely perfectly and then have a graph like this. It just goes up and up and up. But obviously this is not the reality, and you are not able to get this graph, because otherwise you would be just getting this graph, and this would be very unfortunate for everyone. So thank you very much for watching. Hope you learned something, and see you in the next one.